Hello, hello, hello. Happy Friday, non-farm payroll Friday. How is everyone doing today? Let's see who's here. Good morning, Heinrich. Good morning. Let's see. We'll get to the information in a second. Good morning, Sterling. Sterling's been posting it in here. Good morning, Patrick. What else? Thank you. Yeah, the Fed swaps shift of full pricing of rate cut to September from July. The CME Fed Watch tool is still pricing in for June. So we're gonna have to see which changes. Which changes. Uh Good morning, Mark. Good morning, John. Good morning, Martinez. Good morning, Richard. Good morning, Anissa. Good morning, Jacob. Good morning, people in the background who are watching on things like Twitter or X, sorry. Don't change the name. By the way, I hope everyone has a wonderful weekend. Let's see. Last day of the trading week. We had some pretty decent sell-off yesterday afternoon. Today, non-farm payrolls coming in at 303. Forecast 200. Prior was 270. And Fed was only revised down 5K. Only revised down 5K. Not as big. And January was revised up. So interesting there. We'll have to see how that plays out. Headline unemployment number dropping 0.1%. So coming down from 3.9 to 3.8. Earnings coming in month over month expected at 0.3. Year over year at 4.1. Participation rate ticking up a bit to 62.7 from 62.5. Weekly hours ticking up a bit by 0.1. Government payrolls, huge print in government payrolls. We've been getting lots of government payrolls. Look at these numbers for government payrolls. Again, government's hiring like no tomorrow. Manufacturing payrolls, on the other hand, printing is zero. So non-farm payrolls, private, that's the headline, and you minus the government payrolls, so that gives you non-farm payrolls private. Still beating expectations, but a lot of this beat was due to the huge beat was due to government payrolls coming in 50K higher. That's where we say Collins did not speak on monetary policy. I know Sterling put that in the chat. We have Barkin coming up in just a few minutes, and Bowman at 11:15, and the rig counts, consumer credit change, but that will wrap up the Friday. Tech heading into the open. Chips and tech strong. Nvidia closed below the 62.5 all the way down to 87.5 harmonic. Apple barely hanging on to support, but bouncing today. Surprising enough, because rates are climbing and so is tech, but that could be some covering from any sells yesterday. To see technology, consumer, cyclical, energy leading the way. The only thing down is utilities right now going in the open. Fed watch tool. Still the pause in May. Now, this is risen in June, but still favors a 53% for a cut in June. Remember, the problem is if the Fed wants to stay apolitical, we'll see what they do, but the closer you get to the election, the more that if they cut close to the election, it could be seen as political. So a lot of people view the June as the last possible time you can do the first cut until you get to possibly November, December. But, with this, again, unemployment data, with inflation data, I don't know how cuts are on the table. We shall see. In the Fed speakers yesterday, they were stressing that, maybe one cut this year. Maybe. So we'll see. Fear and greed finally hit the neutral today. I have to see if we're not even in fear or extreme fear, but we've finally reset to neutral, which hasn't happened in a very long time. No, nothing in terms of earnings today. So, this that's a Russell. So the S&P, by the way, remember I pulled off the double yesterday. I said, this way you don't know you never know what you're going to play out. This didn't officially stop it out. Never officially stopped out, and it would have been hard to sit through, but not officially stopped out and completing the pattern yesterday. So, get a little bounce. You the little mini double, and then the run up. Here's the non-farm payroll volatility. At this point, the real key support is about 51.96. going into the open. If that breaks, 51.96. If that does break, we have right around this 51.75 area that's key. Then we have roughly 51.60, and then it's not good beyond there. So if we're going to look at even using this 4-hour pausing bar, hold on, let me pull off these because those are not valid anymore. If we use the 4-hour pausing area, it just reinforces this 51.75 area, then 51.57 to 51.60 on any sell-off. Now, on any rally, the rally areas, I'm really keeping an eye on this 52.25 to 52.27, and then the major rally zone, should this bounce today, would be 52.40 to 52.47 I'd be keeping an eye on. Those are the very key levels that I am looking at right now. If it had a major strong bounce, 52.62. Yeah, tick turned very nasty yesterday. Do we think war rumors increasing because of VIX? Well, the VIX was elevated with the sell-off yesterday and then going into non-farm payrolls. It's also why you're getting a VIX dropping a little today after the non-farm payrolls print. But crude, you know, there could be the retaliation attack from Iran against Israel. There's been some chatter about that happening very soon. So we should see, I mean, it could happen within the next 24 hours. That's going to impact crude. So we'll see how that plays because crude is staying elevated. Hello, happy Friday, Christoph. Good morning, Wick Rangers. Good morning, Legion Reaver. Good morning, Jacob. I didn't think I got Jacob. Highest VIX close since last. Well, let's see. Yeah. Oh, yesterday? Let's peek at the VIX. Yesterday was the highest VIX close since last November. You are correct. You are correct, Jake. Completely. Very, very good observation. So we started to get a little of the vol crush, but now bouncing back. This is getting interesting because we were back in the vol selling mode. And then something's really starting to change in this market. Even if we bounce today, we're starting to break down. You know, the 4-hour rotation zone is now in to sell rallies. The daily, with yesterday's close, the daily rotation zone is in neutral mode. Okay, closed below it yesterday. So it's why I'm focusing more on watching for rally sells now. Now, the weekly is still in bullish mode, but we haven't even retouched with this. So we could easily see some bigger pullbacks unless the S&P, for me to get at least short-term bullish besides micro patterns, would have to get a close above 52.80 at this point. NASDAQ, we closed below the daily rotation zone clearly, and it looks like it could be crossing into bearish mode for sell the rallies. Now, again, the weekly's still in bullish mode. We're holding on to the weekly barely, but if this really sloppy double top triggers, it could take us back deeper into the weekly rotation zone. So, from my perspective, it's being patient on key buy setups. Unless the market can really, well, at this point, if we don't make new lows today, to get into more significant bullish mode, it would have to get above 18,462.50 on a closing basis. Other than that, it will be watching for rally sells, even on a daily basis. We break down below 1806. You got some support about 17,970. And then I'd be looking at about 17,835, then 17,763 as the key support areas. On a rally today, if tech holds up and you get the bounce, one of the key rally zones I'm looking is about 18,215 to 18,255 for a key little rally zone. Above there's 18,3, 18,298, 18,3. What else? 4 or 5 ticks below, yeah, 1200. Let's see. Everybody's pointing that out. I like how people are watching the tick now. Good job. This was the massive selling. These are sell programs, by the way, when you constantly see spikes below there. Those are just massive programs just dumping broad ranges of stocks. Okay? So you really see in the afternoon how, all right, it started to roll over. The tick started to roll over, get more and more negative, but then spike. Boom, boom. And when you see this kind of price action, do not fight it. Do not try to be the hero and buy the dip. You're trying to buy dips into sell programs. And the sell programs will wipe you out. So don't try to be the hero. You get the momentum breakdown. You know, don't too many people get stuck in, oh, I'm gonna try to buy the dippy, and they get done. Now the Dow, the Dow was triggered back on Tuesday. Little spike up yesterday, but nothing even close to invalidating, and then the Dow double finished. Actually closing below the 50. The Dow futures closing below the 50, which hasn't happened since they closed above the 50 roughly last November. So that is pretty key right there. Let's see here. Let me change some of these levels around. We have to update a couple charts here. All right. The Dow really, I'm just going to be watching the key harmonic levels. Again, 39,050, then 39,238 area. Above that, the key resistance is 39,350 is very major resistance. The breakdown targets, if it breaks down, let's see, from the last major pausing area, the last major pausing area, we're right at this 50% harmonic. Let me change the color of this real quick. You can see it right here. So 38,830 area is very key. We start breaking below that, we're between the 50 and the 62.5. Why did I choose this level? Because this was the extended sideways move. You see, these were just minor dips. This was the extended sideways move. So that's why the next key area I'm watching for the Dow closing is about this 38,450 area. That's exactly why this is the key point for people trying to learn this at home. The minor level I'd watch between these 50 and the 62.5 would be this key close from the 5th of March. All right, the Russell, which is heading lower still, coming into very key support area, this 2050 area. That's what I'm watching for today. Any bounce, key resistance is 2075, the major resistance. Again, we already looked at the VIX, which is, we had the little back and forth volatility, but trying to actually move back up in the open. I'm going to be watching for see if stuff really rolls over into the open again. I'm actually surprised how, with the reaction after non-farm payrolls, especially with the tech stuff. Viewing it a little more bullishly. The DAX. So the DAX, we got the bounce yesterday straight to the 50% harmonic, then the roll down. The key area I'm watching on any bounce with the DAX is 18,440 to about 18,460. Other than that, we've got the 3-leg down correction already on the DAX coming to the bottom of the rotation zone. So, going to be seeing if this sets up maybe with today for a Monday %B aggressive buy with a gap fill. But other than that, we'll be watching for the bigger rollover play in the DAX. The notes still stuck at this key support area, 109.19. Still 111.5 is key support, and then 109. The yields rotating up, hitting the resistance area. It's tackled 2 times already this week. This 4.3, 4.4 roughly. Still, the next target above there is 4.49. Hey, Kalani, happy Friday. What else did I miss here? Sterling talking about the volatility jumped to 48.7 during that sell-off. You're gonna keep posting this stuff. We'll take a look at that too. Hold on, let me just get through some of these more things. Dollar index. Dollar index was a well, it's still not officially triggered, but the break, see the percent B was below zero, so that makes the high from yesterday important. Broke through the high, especially with those payroll numbers. All right, so broke through the high with the payroll numbers, and now following through. So it looks like this will trigger also the rotation zone. Coming back into the rotation zone, closing within the rotation zone, and closing above the key support level and the 37.5, and now you get the percent B buy. So now it's got to see follow through. This is again 104.30. I would like to see the close above that for the bull case to maintain strong. Crude, as mentioned, still holding up. Very overextended, but it's in trailing mode only from my perspective. The next target is 88.20. Key support coming in roughly about 84.80. Gold, only pulling back to 12.5%. Harmonic still holding up. The next target of gold, higher if it is to break above Thursday's high, is still 23.49, 23.50 is the next key target of gold. Key support now, this 22.84 area. What else do we have to talk about? Nothing really with silver. I'll be able to update the harmonics, but nothing today. Copper, same thing. We'll watch for something next week. Yen still dipping into the rotation zone, but sideways corrections buying. Yen still cannot get any major strength. Still watching for a potential breakout move there. Euro coming into spiking yesterday into 62.5, 50, and rolling over. And this would be the inverse of that dollar. This would be the sell of the percent B buy. Percent B buy, because this, you can trade currencies with the 0 and the 1 levels. And this breaking below that, the low, now it's going to be the follow through. So if you're looking at the inverse with the euro, you would be looking for a follow through close over the next couple of days below 108, 107.81. Spiders, big bar. That's an ugly, ugly bar yesterday. Closing below the 62.5 from this last little run up. So still expecting us to retest the mid-February, mid-March lows. Today, the key really major resistance is 516.37. 514.08, so on a rollover play would be the gap fill to 513.07, then 512.24, then 510.18. Then you have the exact lows from March 15th to be exact, of 508.12. The Qs also outside bearish engulfing bar, closing below the 62.5. Not yet to that 87.5, little gap up today. So the first target would be yesterday's close area, 435.34, then the 434.82, and then 432.80. Below that, we have 430.67, and then a major cluster area, 428.59 to 429.09. On a rally, I'm using still the old harmonics from yesterday, 437 roughly, 436.91, and then 438.97. Bitcoin still holding up. Nothing yet to invalidate the potential double top pattern. But it's really got to start getting momentum below 65.450 for the bearish case, or get some momentum above 69.6 for the bullish, any short-term bullish case. There, you got your Bitcoin right there, Richard, and for Kalani. Well, let me just get Tesla. Not much to talk about. There's all the different pump stuff going on in Tesla, but hasn't been very successful. The only thing, nothing's changed since yesterday. Only short-term bull cases above 184. Other than that, watching for rollovers. NVIDIA, by the way, coming in on that 87.5 yesterday. So closing below 62.5. So still going to be watching. And the key level is still 841.66 on a daily closing basis. So more looking for continued rollover plays in NVIDIA. Sterling talking about GILD, which, you know, you had the weekly trigger, the double, back in February, a little bounce up into the breakdown point in the rotation zone, and then following through, and now below the weekly 200. So that rolling over, and if you're looking at it on the monthly basis, it was triggered back in February on the monthly basis. Little pause in March, you see there. And then the starting to break down in April. So that is still, you know, if you're trade things shorter term, it would be looking at that on a daily basis for sell setups for the next while, until there's a possible bullish pattern, which I do not see one. By the way, keep a very close eye. Look at Apple. Still barely clinging the key support. Spiking the daily rotation on yesterday and rotating back down. If this breaks and you get that key close down here, and then you follow through below 165 with the close, this market, you might be kissing the market for any short-term bullish patterns goodbye in the short term. J&J triggered monthly, weekly double top. You're talking about this. It's more so because that spike on, it's a little sloppy, but you can, let's check the targets. Because you have doubles within doubles, which lowers the probability, and it wasn't a solid rotation on the monthly, but it can definitely, it's just, look at the targets. So you're looking at 150, 50, 148 roughly, 30, and then 146.10, which is the back to testing the lows from last October in J&J. The next thing I'd be looking for personally is a follow-through close, especially on a weekly basis, below 151.94, which theoretically could happen today. So that would shift the other with the retracement probabilities back to, you know, more negative. So you're seeing things break down. Thank you for pointing these out. Thank you for, again, contributing and being here. What else? I mean, you were losing more and more leadership. I mean, Meta bounced back, but gonna be still watching for this. By the way, the double never triggers off the table, of course. It bounced back, but if this starts losing it again, it's really struggling up here. You see the waning momentum. You see the waning momentum stair-stepping down on things like Meta. I mean, Google, which also there's not the double was invalidated, but Google yesterday, pretty decent. Google's still holding stuff up. NVIDIA looks like it's breaking down more. Google could be interesting because this could be a bull trap. And this does not invalidate this bigger potential double top. Long way off from triggering, but breakout without a weekly follow through. So unless Google bounces back very strongly today, this could turn into a short-term bull trap. Keep an eye on that one. Netflix, see some of these, even though Netflix is not a mega cap, it stalled out at that 87.5, still barely holding up. But we'll be watching for, again, a lot of things that were trying to break out and then go immediately reversed yesterday. Beans. I don't want indicators. There we go. I know I have a page for this, but it's easy. Beans, I do not have any thoughts really with beans in the short term unless we get, it's really waiting for information on the planting season. That's going to be critical right now. The key area that, it's very sensitive spring weather, but we're going to see what happens with that. The key area still is on any bounces is 1263. Other than that, in the short term, I don't have any thoughts on it other than if it starts closing back below about 1165, we could easily retest the lows from March. So that's the key level I'd be looking at there. Okay, going into the open. Let's see. I think the market was a little too happy off that non-farm payroll print. So let me see how the tick opened. Not a real negative tick print. Not a real negative tick print. So if this, the only way is if this starts rolling over and the S&P starts breaking below about this 5205 area. Then if we break below that, I'll start watching for these lows from the non-farm payroll print and the lows from yesterday afternoon, early evening. So, but I need a tick breakdown. Other than that, if we get above about this 52.15, we'll be watching for the high area in the short term from the non-farm payrolls, about 52.23. And then to 52.27, you get above 52.27, and we're back to that 52.40 to 52.47 on a snapback. All right, with that, I hope everyone has a wonderful trading day and have a wonderful weekend. Looks like we're still getting some rotation into tech. Check NVIDIA with the bounce up, the gap up. But again, in NVIDIA, I'd now be watching for rollover plays, especially it's in neutral mode on the daily rotation zone. So bounces would be looking for, again, setups for potential shorts or be very patient with bull pullbacks. I shall talk to everyone next week. Remember, next week will be the final streaming week, Monday through Thursday, and then there'll be the break due to the move. So that's where we sit. And I hope everyone has a wonderful, wonderful day and weekend. Bye for now.